Hey everyone, welcome back to Corporate Decoder, the place where we put companies under the microscope, and today we're dissecting Perella Weinberg Partners' annual report looking for the juicy details. You know, the kind that tells us if their business is really booming or just making a lot of noise. Alright, let's dive right into what really matters, the financials. For the year ending the 31st of December 2025, this firm raked in revenues of $750.9 million. That is a significant chunk of change, but here is where it gets interesting. It is actually a 14% drop compared to the $878 million they pulled in the previous year, 2024. So what caused this dip? The report points to a decrease in mergers and acquisitions revenue. Basically, fewer and smaller deals were happening, which directly hit their advisory fees. Think of it like a baker selling fewer fancy cakes. While they still sold some, the volume was down. However, it wasn't all bad news. Higher activity in financing and capital solution helping companies get loans or raise money helped cushion the blow. Now let's talk about how much they pay their people. Total compensation and benefits expenses for 2025 were $535.4 million. This was a whopping 32% decrease from the $784.2 million spent in 2024. The big reason, a special event last year called a vesting acceleration. This caused a huge one-time expense in 2024 for equity-based compensation that did not happen in 2025. Without that unusual event, compensation as a percentage of revenue actually went up, meaning they paid a slightly larger slice of their revenue pie to their employees this year, even though overall revenue was down. This brings us to the bottom line, or rather the operating income. In 2025, they managed to turn a profit of $48 million. That is a massive improvement from the operating loss of $78.5 million in 2024 and a $115.1 million loss in 2023. This shows they are getting back on track, likely due to that one-time compensation expense in 2024, not repeating, and a better handle on costs. When all is said and done, the net income attributable to Perella Weinberg Partners themselves for 2025 was $35.5 million. This is a huge turnaround from the net loss of $64.7 million in 2024. It paints a picture of a company that had a tough 2024, likely due to restructuring and those equity awards, but is now showing signs of recovery and profitability. Let's look at their cash situation. They ended 2025 with $257 million in cash and cash equivalents. This is a decrease from the $332.8 million they had at the end of 2024. This drop is mainly due to strategic acquisitions and payments for employee incentives. Despite the decrease, this cash pile seems healthy enough to cover their short-term needs. A key move in 2025 was the acquisition of a firm called Devon Park Advisors for about $49.2 million. This shows they are actively investing in growth, looking to expand their expertise, especially in areas like GP-led secondaries. Now, about those client payments, accounts receivable, which is money owed to them by clients, stood at $62.7 million at the end of 2025. This is down slightly from 2024. The good news is that most of these receivables from key clients are being collected after year end, which is a positive sign for their cash flow. On the risk side, Perella Weinberg Partners faces significant risks in the competitive financial services industry. The report highlights changing market conditions as a major concern. This means that economic downturns or shifts in client industries can directly impact the volume and value of the deals they work on, leading to lower revenues, for instance. If the oil market is shaky, their energy sector deals could suffer, and that is a big part of their business. They're also swimming in a sea of regulations. The report mentions extensive rules in the US and other countries that govern their business. Complying with these rules requires constant effort and resources, and any misstep could lead to hefty fines, legal trouble, and damage to their reputation. This is like trying to navigate a minefield. Structurally, the company depends heavily on its operating partnership, PWP OpCo, for its income. This means that if PWP OpCo struggles, Perella Weinberg Partners will feel the pinch directly. They are also obligated to make significant payments under a tax receivable agreement, which could be quite large and impact their cash flow. Essentially, a big part of their financial health is tied to the performance and financial structure of this partnership. Looking at their stock, Class A common stock is traded on the Nasdaq under the symbol PWP as of mid-2025. The market value of shares held by everyday investors was about $1.2 billion. They are paying out dividends with $0.28 per share distributed in 2025. showing a commitment to returning value to shareholders. A really interesting point about their governance is that a specific entity, VoteCo Professionals, holds almost 77% of the voting power. This means they effectively control the company. While this provides stability, it also means that minority shareholders might not have as much say in major decisions. This is a common structure for private equity-backed or founder-led companies going public. So, what is the overall story here for Perella Weinberg partners? They've clearly navigated some choppy waters. After a difficult 2023 and 2024, marked by significant losses and restructuring, 2025 shows a strong rebound. They are profitable again, their expenses are more controlled, and they are making strategic acquisitions to grow. However, the reliance on deal flow, the competitive landscape, and the regulatory environment are constant challenges. They need to keep a close eye on those market conditions and effectively manage their expenses, especially compensation, to sustain this recovery. That is our deep dive into Perella Weinberg Partners' latest annual report. What do you think about their comeback and the risks they face moving forward? Let us know in the comments below. If you found this breakdown helpful, give us a thumbs up and subscribe for more corporate insights. And hey, join our Discord community linked in the description for even more in-depth discussions. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.